Hey there, I'm Sean Loeffler, and this is Internal Warfare Episode 3. The way we've been kind of doing it is the first one was just me, my thoughts about what I need to get out, some things I had to say, I had to know. And then the second one I had to guess. So the third one is going to be, once again, just me, myself, and what we're going for today is the thing that's been on my mind a lot. The thing that we're trying to accomplish with you guys today is investing. My fighters come to me and they've said, hey coach, and I don't say this to be braggadocious, I didn't graduate high school. I'm covered in tattoos, fingernails, ears, and I've got a couple businesses and a couple gyms that we're doing good, we're doing well. The compound now, fortuitously enough, we're in an amazing new location, and things are going well. And so when people ask like, oh, what do you invest in, or what do you do, you didn't really go to school, and I say you just got to learn and do your homework and do research and what you want to have, and for yourself, or do you want to do things? There's different ways to put your money into investing. Sometimes people invest in memories, but we're talking about fiduciarily. So one thing that's been proven is investments, financial investments, and the stock market is something that usually goes up. It has its little dips, but it seems to go up. And the way that is proven for people to change economic class, lower class to middle class to upper class, is with investments, to have investments. So I'm going to tell you guys what I would tell my students or my fighters or my friends is the stock market. If you have some money left over, a fighter will come, hey, I got a job, I wish I could be a full-time fighter, but I got a job, fighting's my side money, so what should I do with the money now, now that I made this money? And I say stocks. And he goes, I know nothing about stocks. So this is kind of like the stock market for dummies. And we're going to do it like a jiu-jitsu, lesson. It's going to have white belt, step, blue, purple, brown, black. And that doesn't mean they're more difficult. It's just the 5 structure ways that I thought was kind of cute to structure it. So now, when we're investing in stock, what's the white belt step? And we're going to have a quote for every step. How does the co make its dough? So you have to know the industry that your stock market that you're potentially looking at is in, and how that industry is performing. A good reference point that you can get is like the Wall Street Journal online, and then they'll have the 10K, which is the annual, or the 10Q, which is the quarterly numbers. And that's a good reference point for that specific company, just like how does a co make its dough, is it making dough, and what's it do, and what industry is it in. So that's the first step, white belt step. And now we move on to the blue belt step. Can the industry group go to poop? All right, so you have to know the industry that you're in. Itemize and understand anything possibly that could negatively affect the stock's overall industry. The research is what you're going to need to do. Like, let's give an example: home building and lumber. So if you're looking at a company that's a home building and lumber company, and the banks change interest rates for mortgages, well, now less people are going to be getting mortgages, which means less people are going to be buying houses, which means less houses are going to be built, which means lumber and home building is going to go down. So things like that you need to look at the the trends and whatnot, and do some research and know those things, and try and get as much background information on the industry or the group that your stock that you're potentially looking at is in. So now we got 2 steps down. You know how your company makes money, and you know the industry it's in and where it's going and where that's at. Bam, I'm going to give you a little compound MMA pointer. There is a type of stocks called secular growth stocks, what they call them. And these are like really stable stocks, meaning like Coca-Cola, the soda, or Pampers, diapers, like Johnson & Johnson. Those are companies that, like, even in a bad market, they go up 10%. In a good market, they go up 10%. It's like those necessity needs, you know what I mean? Stuff like that. So those are pretty safe bets that slowly, incrementally go up. Not huge, but slow, limited returns. All right, now let's move on to the purple belt step, all right? Are they up to date and doing great? All right, now here's what I mean by that. Analyze the stock's current performance and behavior, not the whole company. The company might be doing great, but it's about now, like what's been going on now. Your stock choice has to be relevant. It's got to be productive. And how do you do that? Once again, and I know it sounds redundant, but research. You got to check newspaper articles, the quarterly filings, Google, do your homework. All right, brown belt step here. So we've got the first 3 done. Brown belt step. Is the opposition in a good position? So peer into the stock's opposition. The companies that are out there that could pose a threat to your stock's business. There might be companies out there that could pose a threat. Or you might do research and you might find these rare, that they come out of nowhere, monopolies, where you're like, wow, I can't find competition. Bam, compound tip. Maybe you can make some good investment in a company that doesn't have anything. It's got like its own monopoly going and you can make some money with that. You just got to do your research. And then the other thing is you need to compare your company to the other companies that it's actually competing against in the same industry, to see if it's a good investment. And there's ways to compare these companies that like a 5th grader in math could do. There's a formula, which is nice. And so when I show you guys this, it's not like I made it up. It's for basic stock market stuff. So it's a price to earnings ratio. Now the price to earnings ratio is so simple. You take the price of the stock and divide it by the number of earnings per share. So just how many shares does it have? And then this answer gives you the profit number. So it's just so simple. The price of the stock and divide its earnings per share. All you got to do. Then you do that to the company that might pose a threat, Coke, Pepsi, whatever it is. Even though those are secular growth stocks, I'm just giving an example. But you can pair those price to earning ratios, the PE ratios, to yours. And if yours are looking good, that might be a safe investment for you, knowing that it's a good industry. Bam, one more compound tip on this. Yahoo, the website, they publicly release a company's forward estimates or predictions of what they think they're going to make. So the company will tell Yahoo what their company's estimated to make based on their financial numbers and fiduciary numbers, and then Yahoo actually will show that, and then analysts will come, and analysts actually have a lot to do with stocks, because then stockbrokers and mutual funds and interest, and all these people and short sellers, day traders, then they get this hot tip, and so they sometimes will affect, obviously, the price of a stock. So that might be a good way for you to look at future earnings, get it then, and then sell it, right after people start buying it up, because then it's obviously going to be a little high. And I'm not suggesting doing like some day trading, having to look at it all the time, be safe. But the more effort and energy you could put into managing your portfolio and, being diverse, the better. You want to have risky stuff, moderate stuff, and very safe stocks. When I say stuff, I mean stuff that you're investing in with your money. So you're going to have a very, very hard time being confident with yourself unless you do the last black belt step, all right? Which is to invest or not to invest. Viability is the question. Viability. All right. You got to observe the company's cash flow statements and balance sheets. Those are the 2 things you got to observe, people. And how do you do that? Like, how do I observe that? Make sure your company doesn't have debt. It's got no financial debt. It's got no liabilities. It's got no cash to pay anybody off, and look into that. And if it doesn't have debt and it doesn't have cash to pay anybody off, it's probably, a pretty safe stock, because at this point, people, you should now know your stock. We're a black belt, right? Step 1, is we go back to it. How does our stock make money? What is it and what industry is it in? We got to know that. Step 2, we got to analyze where the industry is right now, in the market. Like, what is the industry doing? Is it good? Is it bad? Future forecast. And that's just more research, more homework, just like anything, like school or relationships or being a chef or a coach. You got to do your research and stay on top of things. Third thing is, are they current and up to date? I mean, we know the company, the industry might be great, but are they doing good? Are they personally up to date? Are they minding all their P's and Q's? And is there anything that we could foreshadow bad about them? Fourth thing, competition. Is there competition? And if there is, what is their competition? And are we better than the competition? Profit to earning ratio, those P&Es, very easy, simple math. I already explained that. Fifth is viability. Is it realistic? Is this a little short-term thing, or is it realistic? Is it going to last for a while and be able to sustain itself and in a industry that's constantly growing and changing, and that's every industry. Now you know your stock. So now that you do these things, get a stock, put a little bit of money behind it, and maybe, just maybe, you can pay off a bill. Maybe you can pay off a little bit more of your house or your mortgage or something. Maybe you can pay for your fight license for your next fight, or your training, your personal training, your gym fees, whatever you need. Heck, buy a boat, you know. I don't know what you guys are going to do, but I want you guys to do something big. Internal warfare number 3. I hope this episode helped you guys, gave you a little bit of an insight into not having to go to school forever to be some, stock market guru, but you could have some investments and you could be relevant in the financial world and in the white collar world a little bit, and bring all these millennials and all these new people into this and kind of introduce you guys to it. And I mean that in a good way. CompoundMMA.com. I'm Sean Loeffler, and you guys are the best.